Do you know how to properly research a company? Most of the time, we depend on YouTubers to pick our stocks. So what happens? Some of them tells you to buy this stock and others would say buy that. Should you just blindly follow them? The answer is a big no. The right way is to check the fundamentals by yourself and to know more about the business of the company before even investing money into the stock market. We will show you how to do it in this video. Stay tuned. Friends, welcome back to our new video. In this video, we will break down the various things that we have learned on how to research a company before even investing. If you are new to our channel, please subscribe and smash the like button to support our channel. Also, if you haven't done already, please click the link below to open an account with Webull and get free stocks. Okay guys, please note that we do not provide personal investment advice and I am not a qualified licensed financial or investment advisor. All information shared in this channel are for informational, entertainment or educational purposes only. Any investments, trades, speculations or decisions made on the basis of any information found on this channel are committed at your own risk. So, let's get started. The very first step to know before investing money into any company is to be a good researcher and know the business. What does it mean is that choose a business that you actually understand. If you don't know about the business, then you have to do some research. Make sure to buy into companies that you actually really understand the business and how they generate revenue or what services or products they offer, and see if you can forecast the future of these services or products. So, how do we find it? Look into the most recent annual report of the company called 10K report. These reports are publicly available and you do not need to create an account or log in anywhere or be an insider to get access to these reports. 10K discloses the financial information of publicly traded companies. So how to get access to these 10K reports? It's really simple. Let me show you how. You can simply use Google or go directly to the company website to gain access to it. Let's use the company Facebook as an example for our research. Go to Google, type in Facebook 10K and hit enter. Select the one from the company itself and open it. Navigate and find and click on 10K report. Under part 1 in the 10K report, click Business, where you can see their mission, products and services, and it also tells you how they make money. As you can see in the case of Facebook, they generate almost all of their income from advertisements. You can also find the list of other companies that FB owns, like Instagram, Messenger, WhatsApp, etc. Depending on the stock platform you use, you can see the business description. For example, if you use Robinhood, go to the About section to get an idea. The second step is to check the year-over-year performance of the company using the financial details such as balance sheet, income statement, and cash flow statement in the 10K report. Use these details to see if the year-over-year performance of a company is pointing to its brighter future. analyzing at least 3 10K reports may be worth to find out the direction the company is moving towards. When we do our analysis, especially if the 10K report is more than 5 months older, we would also go through the recent quarterly report called 10Q to go through the same financial details as we mentioned before. You can also find the 10Q report in the company website. So, now you know how to check the revenue, assets, expenses, net income, and cash flows of a company. Going over the risk factors in the report will also provide a better understanding of the company. The third point is to find the competitors of the company. Now, we need to identify ideally at least 2 competitors. Analyze the competitors the same way and find what they are planning to do, where they are going. Read a little bit about each of the competitors, like what's their growth rate, what's their margins, what business lines are they trying to go into, and sometimes, let's say, you see a big difference in margins between one company and another. You could look at, well, why is there such a big difference? Sometimes this reveals a competitive advantage that one company has over another, and maybe you can choose the competitor for your next investment. Reading the management's decisions and analysis section will also give you an idea of what's happening with the company. As you see with Facebook, for example, the number of active users is trending upwards. The next step is to evaluate the ratio. For this, go to Yahoo Financials. Yahoo makes it really easy for us investors. Look for PE ratio, or as some people call it, multiples. There are various multiples. But at this time, we are only looking at the PE ratio and is used to determine if the company's share price is overvalued or undervalued. If a stock's PE ratio is relatively low compared to similar stocks or competitors, that could be generally a sign that it's undervalued, meaning that it's potentially a good place to invest your money. Also, keep in mind that investing in brand new companies may provide huge returns but comes with a lot of risk. And in order for you to properly analyze the company, invest in stocks which have been in the market for at least 5 years. So you can get more financial details like the year-over-year performance for analyzing them before investing. The next thing is to research the management team of the company to see their experience and proven track record. They are the people who make decisions. A good management can turn around a company. So guys, there is no golden rule, but by following these will certainly help your return on investment. There are also other things to consider before investing into a stock market, such as margin of safety, details like insider buying, and much more. But those are beyond the scope of this video, and we will come back with more details in the upcoming videos. Thank you for sticking around all the way to the end of the video. And if you haven't done so already, hit the subscribe button, and I look forward to seeing you guys in the next video. Thanks again. Bye bye.